Hey, all right. Good morning, everybody. So we got through with TPI. Now we got PPI. I was compiling a list of things that we have headed for us, and we've got OPEX on the 16th, FOMC on the 28th, QRA on the 4th, but really it's on the 2nd and the 4th because URA is a two-part event. And then OPEX again on the 20th. And banks have just kicked off earnings season in earnest this morning, and it's not all rainbows and sunshine. Wells Fargo just got kicked in the face. So if they all did good, that would be one thing. If they all did bad, that would be another thing. It's a mixed bag, and that makes it a little more difficult in the long run. Not impossible, right? It just life would be better or easier if they all missed or they all beat, and then we don't have that mixed bag. But the banks are different, right? They're not all the same. So we're going to need more info. But at the end of it all, by by the time we get to OPEX and onto the other side of it, we should have heard from some of the biggest banks. And at that point, we'll have a clearer idea where their struggle is. I was working through some material yesterday on lending, and the banks have really, really dialed back how much they participate in the lending. And one of the problems with that over the last 18 months, with their lack of participation in the lending, is that it forces people to go to alternative lending, right? And of course, that helps the firms of the world and those buy now, pay later places. But if the administration was to push through this cap of uh, interest rate at 10% on credit card interests and loan interests, it's going to break everything, right? That would send us into a recession, a tailspin, get pretty nasty out there. But it was just a proposal anyways, and at this point it's not even something that's a viable opportunity. So we just want to keep our eye on the dates, see what's ahead of us. These are the biggest ones, not counting, PPI today. The call wall and the put wall, pretty much everything is in focus on that. We don't have to zoom or scroll to find the levels. They're all right there. We are again dancing on the 10. If you look at the crossover event that we had back here, that got us firmly back up through the 10 and then tested it, skipped a day, tested it, breached it, skipped a day. Now we're there again. That makes sense when we think about how in a good market, when things are going well, it's like a rock skipping on the water of a pond, right? That would be price just riding above that moving average and everything going good. The problem is when we start to roll over. And the quickest tell for that is the white line here, the 3-period moving average. When that white line starts to roll over and curl in, it doesn't have to cross, right? It can be a fake out. But if that white line crosses through the blue line, which is the 10, then it's a bear surge signal to the downside. You get a lot of momentum, you get a lot of speed, you get a nice quick move down, and then of course you can cross over the other way, go back up. So it's all short duration stuff, right? 1 to 3 days, pans out really fast. We're not looking at, an entire bear market or anything like that. Just a little bit of a pullback in the existing situation. But, this big, long, beautiful run from last year is completely different than what we're in right now. And that's what seems to be so difficult to get through to traders. We're not going anywhere. We haven't done anything since October. We're just in this really big range. And a lot of the market, some analysts say 80%, but chalk it up to 65, 60. 60% of the market is going to do what the S&P does or do what the NASDAQ does. So if the indices are stuck sideways within this really big range, so is a lot of the broader market. When you add to that the lack of forward guidance from the Fed, and it becomes, a hostile environment for newer traders who just want to buy and hold into a sector, an industry, a group, it just makes things a lot more difficult. So pace yourselves. All right, the Nasdaq is down the most at 0.5%. Then the S&P just past a quarter. Little discrepancy there. It's not too much at this point. Keep your eye on it. See if it widens out more. It shouldn't, right? They usually run pretty comparable. They should be within a tenth of each other. Then the Dow and then the small caps. UK is doing good. Everybody else is just mixed in there. So no real guidance in this. If you look at the numbers for the PPI, we're not far off. Unless we get some shock and awe that can't be seen now, this PPI number this morning should be just nothing, right? We got some Fed speakers today. It is Wednesday, so we're going to get some crude oil inventories. There's a lot more talk about Japan intervening. Things are getting out of control over there. And the Fed Watch tool passed 95 yesterday. We're up to 97% chance that we do not get any sort of cut or hike, that they just stay where they are. 97% chance. And they really don't like to shock the markets. So if they were going to cut, they would start talking about it just to feather that into the conversation. It's almost guaranteed, right? Of course, there's this minor amount of chance that something could go wrong between now and then. It's just not likely. The odds of a cut shifted very slightly for the March meeting. I mean, it's such a minor amount at this point that we really need to get more out of it. But everything starts with a minor shift, right? So keep your eye on March, see if they start to really do anything with it. The threat from the White House is at moderate risk based on the current schedule. Looks like that'll be around 2 o'clock. He's going to participate in a signing ceremony. And of course, at that time, it's possible that he starts chipping his teeth, and therein lies the threat. All right, we got inside day breakout last night, and we managed to get back inside again. It's not impossible to do that, but it does signal that it's unlikely we continue to go lower, right? It does give us a really simple setup. If we break back down below the 10, it's game on, right? Just getting down below that level and then coming back up through it is usually a done deal. And then you know we're going to stay above it and we look for long opportunities. If we cross back up through that level, get all that work done, and then we dump back down, we just head to the downside. Take it. So 0 gamma, 20 day, and then we'll target that put wall, which will become a magnet once we start getting close to it. 69.32 cog line as a possible overshoot of the put wall. See him monetize it there and bring it back in again. We're not looking for some big crash and burn, right? Talking about, 69.80 down to 69.30, good 50-point run from the volatility trigger to the put wall with an overshoot. And that's if we did start to roll over again. So from that point of view, it's a really simple play to the downside because we should not break back down below the previous day's level now that we're back inside of an inside day breakout. And we definitely should not break back down below the 10 now that we've recovered the 10. Those are two things that kind of stack together. It's a gift, really, to have that this morning. We are looking at possible reciprocation as well. For those of you who know, you know. So think of your jigsaw, right? Your reciprocating saw is what they call it. Think of the distance have we've gone here from VWAP. That's the distance. It's the same sort of analysis that you do on trend candles or head and shoulder breakouts or wedge patterns or anything like that, right? You measure that distance, how far we exceeded VWAP on one side, and then you plot that wherever we happen to break to the other side. That's our target at this point. If we get above VWAP, which I don't see why we wouldn't, and we begin to expand, then we'll be looking for this reciprocation. It's just helping us target how far the move owes us. And it basically owes us back to the Globex high, right? Maybe a wee bit of overshoot. But that's pretty close, especially since we don't have the breakover yet. And for all we know, this could end up being a little lower down by the time, we get the cross. So I'm watching for reciprocation here. If we get above VWAP, getting back to the Globex high is basically the measured move of that reciprocation. That would be a nice play. It's not 50 points, but it's 20. Surely we can get 10 out of that 20. If we can get a breakout above our own Globex high and start putting in some new levels, that would also put us above 7,000. So we got 70.11. And then yesterday's RTH high, which is around 70.25. Then all of yesterday's high, which is greater than 70.32. It's actually right up there on that 70.38 level. So we'll take it. There's no reason for us to be overly bullish. Just getting back inside makes sense. And then, of course, when we get to the ADRs, we're going to be talking about the same thing we talked about back here. which is when you get to the one ADR early enough in the day, you can go to the other ADR by the end of the day. That's not bullish. It's not bearish. It's just, hey, we reached one edge early enough that we have time to go to the other edge. That's on the table today as well, right? So that fuels the same thing. If we break down and close underneath this ADR half, we're going to target the ADR full. That's just how it is, right? That's an inside week breakout. I guess that doesn't really apply, does it? It's breaking out of the low that we've set on the week, but it's not breaking out of last week's low. So I guess we wouldn't call it an inside week breakout. It would just be printing some new lows on the week. That full ADR looks like the 111 reversal if we was to measure this Monday and Tuesday space. Either way, 69.40, it lines up with everything that we were talking about on a breakdown anyways. So if we were to get the breakdown, that's what we want to focus on. 69.40 or 69.32 cog line. Otherwise, we want to focus on getting back up to our own Globex high and then the upper ADR. It says 27, but I would focus on 32 because it's the cog line. It's close enough. It's 5 points difference. Overshoot the ADR, get into the cog line. That would get you really close to yesterday's absolute high. We'll take it. And this isn't bullish, right? This is just making the other side of the move. Today's floor pivot is higher than yesterday's floor pivot. That's bullish. But price opened underneath it, and that's bearish. So those two kind of cancel each other out. Today's channel is narrower than yesterday's by a considerable amount, but it's still a wide channel, all things considered. That channel can get so narrow, all you see is a purple line, right? That's how narrow it could get. So the fact that you can see anything in there at all, like yellow lines and red space, shows that it's not that narrow. A narrow channel implies if we break out, we probably keep it and just keep on going. A wide channel implies if we break out, it likely fails and we come back in again. Just remember, these channels, they're not making price do anything. We won't break out because it's narrow. We won't not break out because it's wide, right? So these channels, they're just giving us insight or perspective on what to expect from price if we did get a breakout. But they in no way make price do anything. We are already at S1 and we managed to climb back above it, which it's a lot like the other levels that we were talking about, say an inside day breakout or getting below the 10. Getting back above S1's kind of a big deal. And we didn't do it just once today. We did it twice. We got underneath it, got back above, got underneath it, got back above. It really needs to keep it. I don't think it's going to like it if we get back under there a third time today. There is a thing when you're using these S&R lines, it's part of the whole concept. It's called S1 R2. Well, we're at S1, so check, got that done. R2 is way up here at 70.63. Now again, this isn't bullish and bearish or any sort of stuff like that. It's just mechanics, right? Mechanics say if you hold S1 and you cross back through the floor pivot, you can hit S2 or R2 by the end of the day. So S1, R2. If we had gone to R1, we'd be looking at S2, right? Because that's the way it works. That seems a little much for me. 70.32 is right in my radar, but 70.63, I think we would need a headline for that. But going from S1 to R1 is perfectly acceptable. That's basically going from ADR half to ADR half, just using different math to get there. So I like it either way. Getting a floor pivot crossover is basically getting a new Globex high or breaking our current Globex high, however you want to look at it. And then that helps us target the cog line 70.32, which is also R1, which is also basically yesterday's high. It will act like a magnet. We will gravitate into it. It's a nice play. And it all starts with this crossover down here because this is lining up like a TRB or a downward facing megaphone pattern, right? Maybe a falling wedge. Falling wedges break to the upside. Be a really nice crossover event from these lows back to the floor pivot, get through that to the cog line. So it really doesn't matter what direction we go today. We got some nice plays either way. What a gift. Last week's point of control has acted like a speed bump for us once this week. I would sure hate to test that again so early in the week, but we may end up doing that again anyways. If we do get through our own low of the week, there's a value area low here, 69.40, and it lines up with the other 69.40 that we were looking at, but there's also that 69.32 cog line, which lines up with this area back here. They defended it before. Let's see if they defend it again. Otherwise, we've developed a lot of trash overhead, and a move to the upside is going to be difficult. It's not to say that we can't do it, but look at the sharp contrast here, how thick and solid that level is. And then right outside of the value area low, it just falls off drastically. So we're in this thin space. It's easier to move around when we're in that thin space, but to try to make a move back up, we're going to hit that. And then you got 69.92 cog line, which is basically the point of control for this week's value area and volume profile. We can get back above, but it's going to take one heck of a headline. $10-day, 30-minute volume profile and TPO. We got the shift, but not where we were looking for it, right? So we jumped up into 88. That's now the new home. And it doesn't look like we're going to get any change anytime soon here. The candles that built this are here. So we would need almost an entire week just to get to those candles. The only way that this point of control is going to move right now is if we build out a new level. And there is a level down here that we could continue to work on, but we would need to get down there. That's around that 69.50 area. So we're talking about breaking our own Globex low and dropping down into 69.50 and then building this level out, holding the line there. It's technically possible, but I think it's skating on thin ice. Probably not a good idea to try that. It'd be better to hang out where we're at, put in some more work. We do have the point of control over our head, but at this point, since we're here anyways and we're just, running back and forth through it, it's not support, it's not resistance. It's going to act a bit like gravity. And we could even see reciprocation moves here, right? That it could owe us this distance from one side to the other. And that keeps us within the value area channel. Escaping the value area channel, I think, would begin to really break things. But we got that 69.32 cog line out here. And then it lines us up on this same spot, right? That area down there. All right, we're done with that POC, VPOC. We don't have a new one because we done crossed through that level. The textbooks are going to tell you to carry these lines forward every day, right? The value area high, the value area low, and the point of control. We can see that price crossed over that point of control last night. It's probably hard to see in the stream, but right there was a crossover, right? So technically speaking, this is not a VPOC level anymore because we've already hit it. The textbooks will say, so what? It doesn't matter if we've hit it. We should carry it forward every day anyways. And I don't really argue against that. It's just I've got so many pivots. I don't need to stack more on just at a GP, right? General principle. I just don't need it. I tend to only carry it forward if it's a VPOC or if it's a POC that carries some level of interest. And right now it has my attention. I do believe that has some level of interest. The only thing that wipes that interest off is that it's basically today's value area high. So you've already got it marked anyways. You don't need that level, right? But keep it on there. Plus, it's basically 7,000. You should already be watching 7,000. And so again, not that valuable. If you didn't mark it, you'd be fine without it. There's not a lot of clarity in the distribution last night. 3 zones. So it's really scattered. We want to see how this gets resolved as we get into the open. And now that we've really kind of highlighted it this way, any move back to try to reclaim the previous levels and make it through the top side of the Globex, we're going to have to fight through all of that from yesterday, which is a high level, and the point of control from today, which is a high level. And then, of course, get back to Globex top. That's if we can even do it to begin with. A lot of times traders are asking me, are we going to go up or are we going to go down? Hey, don't even bother guessing, right? If we go up, you got the levels, trade them. If we go down, you got the levels, trade them. There's no reason to try to guess which way it's going to go. Just let it go and trade it. Otherwise, you start getting into the prediction business. And I still haven't got my magic 8 ball, so that won't work. At this point today, we are running IX10. Everything is inside of Monday's range. Some analysts won't count this because we wicked outside here, right? I'm not that analyst, but there are analysts out there like that. And in fact, technically you can tighten it up and focus on Friday's range, all things considered. I know, right? I ordered that thing months ago. You think it would have been here by now? We could have tried to use something like Wednesday, but see how we closed outside of it? That takes it off the table for me. But using Friday still is legit. GTFO, right? We gotta get out of this box. And technically speaking, now that we've marked it out like this, it owes us this wick on the other side. And that still wouldn't give us an inside week breakout to the downside, but it would get us down into that 32 cog line. It's funny how that all lines up, isn't it? Those cog lines are pretty amazing. So either way, that's the box, right? That's what we have to get out of if we're going to get anything else done. Now, looking at our distance from 10, I mean, we're on the 10 days, so we have no distance. It's not necessarily a bad thing. Being at the 10 is like being in the center of the basketball court, right? We can now have an equal chance of running in either direction a good 1% before we even begin to find any friction. It is always an easier play when we are expanded deeply to one side or the other, because if you're already at the farthest side of the basketball court, well, there's only one way left to go, right? You just go the other way. So those are always great. But when you're sitting in the middle like this, now it's a proverbial two-way street, or you can take either side of the court and you got a full run either way. And I do like a two-sided market. Now, looking at our distance from the 10 week, we're still working on this lower high, lower high, lower high situation. That hasn't changed, and there's no expectation that it's going to change anytime soon. At the moment, being further than 1% away from the 10 week means we're outside of that gravity, but not by much. So if we dip below 1%, it's likely that we go down and tag that 10 just because we'll start to get within its sphere of influence. But otherwise, maintaining outside that 1%, we could see this as the reset and maybe try another run towards 2 to 2.5. This just shows that we're not overbought. We're not overextended. We haven't moved too far too fast. It doesn't owe us any sort of pullback or mean reversion, least squared methods, dot plot statistics, or anything else. We're good. It ain't broke, don't fix it. All right, looking at what's going on out there. Nat gas is down the most. The Mag 7 down volume is down. Yep, that's a double negative. Then, generically speaking, tech and chips and Mag 7 are all down, along with cloud computing growth. But our benchmark is 0.5%. So once we drop below that level, we don't really want to focus on those. I tend to look at them though to see, what is down, whether or not it's at my level, and then keep my eye on them to see if they continue to degrade or if they're going to turn around and try running back the other way. Just be mindful of things like IGV and cloud. They can be tricky because they'll read the previous night's after hours move as a pre-market move, and that's not exactly accurate. It's better to go in and just look at their charts. Looking at what's up this morning, we got gold miners and metals and mining, some Bitcoin. and uranium. Not really exciting. So, generic energy. You don't want a rally day on generic energy. You're going to need a little more juice than that. All right, so silver's leading the way, pot stocks right behind it, and then gold miners, crude, USO, CL, more gold, uranium, energy, ag, Bitcoin. A little expanded tech, China. So we do not have the names that we would need. We don't have the sectors that we would want for a rally day at this point. Doesn't mean that we can't rally. Keep your eye on the Mag 7 and, of course, breadth. After 9:30, if we have the Mag 7 or breadth, we could break out. Otherwise, 0-day flows could do it. Headline news that, adjusts bonds or dollar or yields, treasuries, FX, that could do it. But at the moment, we don't have any of that, right? So that's what we want to be focused on. And you've already got the levels, and it really doesn't matter which way we go today. We got nice setups either way. Really good, clean setups. So we break down, you got the levels. We break up, you got the levels. Sit back and make some money. Everybody, be careful, be safe. Have a good day. Keep your eye on the clock. I'll see y'all tomorrow.